Welcome back. Stocks are lower, but oil is higher. Take a look at futures this morning with about an hour away from the opening bell. The Dow Industrials off of the worst levels of the morning, but down 130 on the Dow, down 24 on the S&P, and the Nasdaq lower by 124. We are about a minute and a half away from the durable goods number, so we'll get that economic data to you as soon as it hits, and we'll check if markets change. Oil right now is higher, with crude oil at the highs of the morning up better than 2% at 114.87 on crude oil right now. President Trump just posted on Truth Social moments ago. He writes this. He's previewing what could happen tonight once his 8 p.m. deadline for Iran crosses, saying now that we have complete and total regime change, where different, smarter, and less radicalized minds prevail, maybe something revolutionarily wonderful can happen. Who knows? We will find out tonight, one of the most important moments in the long and complex history of the world. 47 years of extortion, corruption, and death will finally end. The president has a deadline tonight at 8 p.m. Eastern for the Iranians to open up the Strait of Hormuz or face destruction. Joining me now is MacroMavens President Stephanie Pomboy. Stephanie, good to see you.
Great to see you.
And you have been talking about hard assets on this program for a while. Yeah. David Kudla is with us from Mainstay Capital this morning. He agrees with you that you want to own hard assets right now. When you say hard assets, do you include oil?
Absolutely. Yeah, I've been bullish on gold for a long time, but oil as well. And, you know, I really was stunned at this enthusiasm for AI, and yet the sort of outright rejection of the energy required to deliver it. And so you've seen massive valuations on the AI stocks, and yet all the energy stocks have been trading at very reasonable or very low valuations. And for some reason, people sort of ignored it. It wasn't sexy. But that, I think, is a story that's really starting to gain some traction, and I expect will continue.
So, I mean, when you look at oil, do you want to buy the actual commodity or do you want to buy oil companies? Same with gold.
Yeah. Well,
the bullion or the gold miners?
Well, I started out in gold many years ago, as you know, in the bullion, because it takes a while for the increase in bullion to actually generate enthusiasm for the stocks. And so you had this huge run up in the bullion, and then you want to start moving into the stocks, which become really great levered bets on the bullion. And I think the same is probably true with the energy sector. Although right now, you know, given the run-up we've seen in oil, I'd probably be more inclined to buy the energy stocks, the producers, than necessarily the oil itself. All
right, I want to come back to this point. Durable goods are out for the month of February. Let's get to Cheryl with the numbers. Cheryl.
Had more of a decline than expected, down 1.4% month over month for durable goods orders. The expectation was down 1%. If you strip out transports, however, the numbers are better than expected. We were looking for a gain of 0.4%. We got a gain of 0.8%. Core cap goods actually a little bit better than expected. We were looking for 0.4 to the upside. We came in at 0.6 to the upside. But one of the things that I'm looking in here is obviously I'm looking at not just transportation orders, but defense aircraft parts down 3.8%. Maria, I bet that story changes in a month. Back to you.
Yeah, and this doesn't surprise me, Cheryl, because, you know, with a backdrop where oil prices and the cost of energy has been going up, I would assume corporations, large purchasers are going to buy less and less of those durable goods orders. What do you think?
For sure. Going in a period of uncertainty like this, why would you jump out in front of that? Why wouldn't you wait and see how this plays out, especially if, as the president has indicated, he intends to make this a very short-lived affair, and we all hope it will be.
And what do you think about that? I mean, how do you want to be positioned, knowing that the president is trying to get out of this as quickly as possible, but he's not shying away from threats? Yeah. If they do not open the strait tonight by 8 p.m. Eastern, he's ready to pounce on energy facilities. So, and by the way, breaking news today that the U.S. did hit several military targets, underline military, not energy, not electricity, but military targets on Karg Island overnight.
Yeah, well, I think there's a massive urgency to this because we've got the midterm elections, and that, I think, is the #1 framework in which to analyze this whole engagement, is that, you know, it's a big gamble at a time when they were just starting to get some traction on the affordability argument in terms of slightly lower mortgage rates, lower gasoline prices. It's all completely reversed. I have this sort of my measure, the misery index, that looks at mortgage rates plus retail gasoline prices. It's back to where it was at the peak of the global financial financial crisis before the Great Recession. So it's a really big drag on consumers, and Trump needs that to reverse well in advance of the midterm elections so that they actually can win this affordability argument. So I think that is the motivating factor behind tying this up as rapidly as they possibly can.
When you are allocating money, let's say to equities, and you talk about these equities that are related to hard assets, the gold miners, but you say you buy the bullion first, but on oil you would buy the oil companies and the oil commodity later. Do you want to look for opportunities right now? Because the oil stocks are up.
Yeah.
In the last couple months.
I mean, I guess the question is, what's your mandate? Are you a long-only mutual fund, or are you a hedge fund who has the luxury of not owning equities in general? If you're a long-only mutual fund, you've got to be long something. And so I would prefer to be long any resource-producing companies vis-a-vis, financial, more paper asset, purely financial assets. But if you're a hedge fund and you have the luxury to step back and wait before coming in, I mean, I would expect that oil prices are not going to sustain these levels over the long term. So, I would be waiting for opportunities to buy down the road.
And you made the point the other day, which I completely agree with. When you're in a stressful situation and you need to raise money, raise assets, liquidity, you sell what you can sell.
Yeah.
And maybe whatever you can sell is, growth.
Absolutely.
And that's what they were doing.
Yep. Or investment-grade bonds, or gold, as the case may be.
Exactly. Stephanie, great to talk with you. Thanks so much.
Thanks for having me.
All right, Stephanie Pomboy. We'll be right back. Stay with us.